PM Tan Sri Muhyiddin Yassin today announced Pemerkasa, a 20 billion ringgit economic recovery plan 2 days ahead of the one-year anniversary of when the PN government placed the country under the Movement Control Order. Consisting of 20 initiatives, Putrajaya has committed to providing a fiscal injection of 11 billion as it works to contain COVID-19, strengthen the nation's competitiveness and steer the economy that has been brought to its knees by the COVID-19 pandemic. Included in the PM's speech was a promise for no more full MCO. Instead, the government would focus on localised MCO and related clusters. One of the first measures Muhyiddin unveiled out the gate was the government raising the allocation for the national COVID-19 immunisation program to 5 billion from 3 billion. Among the help for businesses include 700 million for a 3-month extension of wage subsidies for companies affected by the MCO and tax breaks for workers' premises and accommodation. Putrajaya has also allocated 1.2 billion to help those suffering a loss of income, comprising 500 ringgit one-off payments to B40 and for Bantuan Prihatin Rakyat recipients earning 1,000 ringgit and below. There will also be a 3-month extension of the 10% discount on electricity bills till end June 2021, which will cost the government 135 million. The government is also fixing a ceiling price on RON 95 and diesel. The government is also putting out a lifeboat for the tourism sector, among the hardest hit by the pandemic, in the form of tax exemptions and cash assistance for various parties. Pemerkasa also includes a 12-month waiver on listing fees for those wanting to do so on Bursa Malaysia. Maybank says its capital and liquidity conservation will remain the group's utmost priority, given lingering uncertainties over a potentially weakening credit environment. In Maybank's 2020 annual report, Group President and CEO Dato' Abdul Farid Alias says that the bank's focus will be on growing low-cost funds in the form of current and savings accounts across its home markets in view of the low-rate environment. Farid says Maybank is anticipating that the interest rate environment in its home markets will remain relatively unchanged, hence resulting in flattish net interest margin trend for 2021. In Malaysia, the economic recovery is expected to be gradual and uneven amid pandemic containment measures such as MCO 2.0, the emergency declaration, and the ongoing rollout of COVID-19 vaccines. Elsewhere, he says the bank is anticipating a U-shaped recovery in Singapore, while in Indonesia, its GDP is expected to rebound by 5.3%. All of this will be driven by a mixture of accommodative government policy and deep stimulus measures. Farid says Maybank will continue monitoring asset quality closely for potential slippages, given the uneven trajectory of economic recovery. Pharmaniaga saw its losses narrow for the fourth quarter of FY20 to 6.33 million from 178.6 million despite reduced demand from its concession business due to the ongoing COVID-19 pandemic. Revenue for the quarter dropped 11.3% to 634.6 million. It also declared a fourth interim dividend of 1 cent per share. Numbers were better on a full-year basis, with Pharmaniaga reporting a net profit of 27.5 million for FY20 versus a net loss of 149.2 million in FY 2019. This was despite revenue dropping 3.38% to 2.73 billion from 2.82 billion. Moving forward, the group said it will continue to support the government's vaccination program while at the same time strengthening its own vaccine business to create an additional income stream. Pharmaniaga notes that it had signed a MOU with Indian biotechnology company Serum Institute of India for the pneumococcal vaccine. The group adds that its existing contract with the Health Ministry for the provision of medicine and medical supplies will continue until November 2024. The world's largest sovereign wealth fund, Norway's government pension fund Global, had invested in 145 Malaysia-listed companies as at December 31st, 2020. The fund has a market value of about 11.08 trillion Norwegian krona or 5.48 trillion ringgit. The names include Genting Malaysia, Mr. DIY Group Malaysia and Top Glove Corp, according to the latest updates by the Norwegian Central Bank's Asset Management Unit, Norges Bank Investment Management. Breaking Breaking it down, NBIM says the fund holds 0.7% in Genting Malaysia with $26.25 million, 0.26% in Mr. DIY with $12.38 million, and 0.89% stake in Top Glove worth $108.68 million. Other Malaysian companies in the fund's portfolio include Bumi Armada and Bursa Malaysia. According to NBIM, in 2019, the fund had invested in 146 Malaysian-listed companies, while in 2018, that number was 152. Top Glove Corp has claimed trial against charges for failure to provide Labour Department certified housing. The matter has been set for another mention on April 28. In a statement, the glove maker said it was present at the Ipoh Sessions Court yesterday for the first case mention. To recap, in March last year, Top Glove was charged with 10 counts of failing to provide JTK-approved workers' accommodations. The offences were allegedly committed at 10 different accommodations at Pusat Perdagangan Tasik Mutiara, Ipoh. The company pleaded not guilty to all charges. Top Glove reiterates that it remains highly committed to ensuring high-quality welfare and working conditions for its workforce. It adds that it has also set out current and mid-term plans to continuously improve the standard of the various types of accommodation it provides its workers.